Okay, everyone, well done. You're doing a great job. If you have watched all the videos with me from adjustment A, then well done. We're almost at the end. Hang in there. So now we are going to deal with depreciation. I know that a lot of students just hate depreciation. Um, Honestly, I used to not be a fan either. But, honestly, practice makes perfect. Just keep at it. You'll get used to it. It's not such a big deal, I promise. Okay, so let's deal with it. So I says depreciation on vehicles is calculated at 20% per annum on the diminishing balance method. Before I start with this, I just want to say I know that we had question 1.1, which deals with the profit or loss on the sale of an asset. I will be addressing that calculation here with this. Okay, but for now, let's start with depreciation on vehicles. So this is pretty easy. It says that it's 20% per annum on diminishing balance. There were no sales or new vehicles, so it's pretty straightforward. So we know that depreciation is an expense. So we're going to write it right there. We're going to calculate depreciation on vehicles first. So far we have, where is it? Okay, here we go. We have 220,000. That's the cost. So let me calculate it separately for you. So we have, this is depreciation on vehicles. Oops. And we have 220,000. We are going to subtract the accumulated depreciation because it's on the diminishing balance method. And that's 41,000. So 41,000. We then get 179,000. Because we are using the diminishing balance method, we're going to use this amount. So 179,000 times 20%. And this should give us our depreciation on vehicles. The amount is 35,800. If you have the memo, so I'm going to write that in here. If you have the memo for this, the answer sheet for this income statement in the booklet, they have the incorrect amount. Let me find it for you. Oh, where is it? Where is it? Where is it? Oh, here it is. They have 38,500. That is not correct. If you add all three amounts, you do not get this. And that is because this is wrong. It is not 38,500. It is 35,800, and that is how we calculated it. Okay, so that's the easy one. That was depreciation on vehicles. We now need to calculate depreciation on equipment. And this is still easy, but it's not as straightforward because we had a director who took over one of the computers. So first they want us to calculate the depreciation for this year on the one computer that was taken over. This is important. So when we are calculating depreciation for equipment, there's going to be two different amounts. There doesn't have to be, but this is how I calculate it. So one depreciation amount is only going to be for this computer. The other depreciation amount is going to be for all the other equipment. So let's go ahead and calculate this one. Depreciation is 10% per annum on cost. So this is my favorite. This is really, really easy. So let's write it in there. So the cost is 22,000 times 10%. And okay, so we only had this computer till the 30th of June. The director took over this computer. That means July, August, and September, we have no depreciation because we didn't have the computer. We only had this computer for 9 months. So that is how we are going to calculate this depreciation amount. When you calculate this, you should get current depreciation of 1,650, I think. Yes. And then you can add that to get accumulated depreciation, which is not important here and which you are not going to use, but I'll just write it in for you. It should be 7,150. 7,150. Boom. Okay. So we know that this is the current depreciation amount of the equipment for this year. Okay. And I said there is also depreciation on the other equipment. So it's 10% on cost. So let's go to the cost amount of the equipment, 190,000. And I'm gonna do it here. Depreciation on equip. So 190,000 Rand. One more zero. But we are going to subtract the cost of the computer we sold because we have already added that depreciation. It's here. So if we don't subtract it, that means we're going to calculate depreciation on that computer twice. And that is obviously not correct. So this amount should be 168,000. And we're going to take 168,000 times 10%. And that should give you 16,800. So we need to add that too. Okay, if you add all the amounts, so I'm going to do it right now. Let me see. I'm adding. Yes, you should get 54,250. That is the same amount in the answer sheet, but this amount, once again, is different. And I have shown you how we calculated that right here. Okay, now talking about depreciation and our equipment, we had this sale, and this sale was for 800 Rand cash. And in 1.1, you should have calculated whether we made a profit or a loss. And I'm going to do that right now because I forgot to do 1.1 earlier. Okay, so we need to calculate what this item is worth at the moment. We can do that by saying 22,000 Rand, 22,000 Rand, let's see. We don't know if it's a profit or loss yet. Profit or loss. 22,000 Rand, that's how much it cost us, minus the current depreciation, which is 7,150. We get 14,850. The director only paid us 800 Rand, which I think is awful because he should have paid more. So this is how much our computer was worth. But this is how much we got paid. That means we made a loss of 14,050. That's a very, very big loss. So that's not good at all. And because it's a loss, it will be recorded. Loss on sale of equipment or computer, whatever you want to write. That loss was 14,050. And once again, here is the calculation on how I arrived at that amount. If you have any questions, please let me know. Okay, everyone, and that's depreciation. Woohoo!